What's going on, everyone? We hope you had an amazing weekend because we have a crazy week ahead of us. There is a lot going on in the market right now. On Friday, 74% of the S&P 500 closed down in the red as the sell-off continued, with some major players like Amazon, Tesla, Google, Microsoft, and many others down deep in the red. This is happening at the same time that it was just disclosed that Warren Buffett just dumped half of his Apple position. On top of that, we have the market repricing in volatility as things are clearly going crazy. We have a completely different outlook in terms of rate cuts going forward. Tensions in the Middle East are still rising. We have another exciting earnings calendar ahead of us. And just look around you. The market is moving in a way that we haven't seen in a long time. Market environments like this one are a short-term trader's dream. So stick around with us to the end of the video. We have a lot to talk about as the market's just starting to go crazy.
Yeah, it definitely is, and the SPY on Friday fell down once again. Like, Mike, that is one hell of a bloody heat map. I cannot believe that we're seeing this much red come in. Now, I will say, if we switch this over to, like, the week overall, it's not quite as bad, right? There were some stocks in certain sectors that did well, like the consumer non-durables, like Coca-Cola, Pepsi, stuff like that. But for the most part, tech stocks were pretty brutal last week, Mike, and we can definitely see that on Friday and just throughout the week in general. And what's been one thing that's been causing a lot of the downtrend lately, right? There's a big snowball effect going on, and we're going to talk about a lot of that stuff as the video progresses. But Mike, that price action was brutal with the SPY on Friday. We've been seeing a lot of selling pressure, and I know you mentioned Warren Buffett is selling out of his Apple position. I also saw he's selling out of some Bank of America as well, and whenever you have the Oracle of Omaha selling your stock, it's not the best sign, so to say.
Exactly. So talking about this a little bit deeper, we could see that Warren Buffett sold literally just under half of his Apple position. For those of you who don't know, Warren Buffett has been investing into Apple for some time now, and at one point Apple made up like almost half of Warren Buffett's portfolio. So basically, seeing a move like this one surely isn't a great sign. And while no one besides Warren Buffett knows exactly the reason for this, either way, it's just not something you want to see. Some are speculating that he could have sold for, tax reasons. Some are speculating that maybe he just wants to reduce the position a little bit given the valuation and the current market overall. But again, this is all speculation. Only Warren Buffett truly knows. But again, no matter which way you look at it, it's not a good sign, especially considering Apple is, one of the heaviest weighted companies and the most influential companies in the entire market. I think this move says a lot, and while it's certainly not the end of the world, it's something worth observing and keeping in the back of your head over these next couple months.
Yeah, and if we look at Apple overall over the past year, we've seen a lot of volatility with Apple, in my opinion, Mike. Since the beginning of the year, there's been a big swing in both directions. Apple started the year right around like that one. Well, it was kind of weird here how they started the year because Friday, December 29th, heading into the new year, they had a pretty big drop. So we'll just act like, 193. They pretty much swung 14% to the bottom. And since that low, they recovered up around 44%. That's one hell of a move by Apple and, up to brand new all-time highs, right? But they were having a lot of issues during that time that they were down. I know China sales got pretty rough, and they're still having pretty rough sales in China, as we saw in their earnings last week. So I don't know. Maybe there's a lot of speculation, obviously, that, there could be some profit-taking by Warren Buffett, right? Especially with all these tech stocks so high, and with the Federal Reserve starting to cut rates. We're starting to see yields drop down. Stocks are dropping down at the same time. It's a little bit rough to see in the short term, Mike, and I can't say that I blame him necessarily either. He's selling at a good time, right? Like, if you're a long-term investor, why not be selling up here at the top like this?
Exactly, and it's like when you look at Apple, it's not supposed to be looked at in the way where Apple's about to crash and burn. Again, it's just, worth noting that Warren Buffett, one of the most successful investors in history, is selling a pretty big portion of his stake. So just keep that in mind going forward. And this ties directly into just the market's current status right now. And we can see if we look specifically at VIX that it is now at its highest point that it's been at in quite a while. VIX on Friday closed around like 23, but at its high point, it was around 30. This level is a level that it has not been to since, you could say, March of 2023. And as we look at VIX on like a longer term chart, we can see that every now and then it has like a big explosive move to the upside. And while most times it tends to stay under 36, the times where it doesn't, if you think the market's going crazy now, wait till you see an event where VIX gets above like 40 or 50. That is true market craziness. And all we can say right now is VIX is moving to the upside in a way that is quicker than it has in a while. And depending on how these issues in the Middle East and the current market price action and sentiment continue to develop, that's what will ultimately dictate how high VIX goes. But the main thing to know is that VIX is running hard and fast right now.
Yeah, it really is. And some of these developments that we've been talking about are just now starting to play out. You know, whenever we talk about VIX and we talk about a lot of this short-term movement, you know, there's a lot that we could attribute to this. You know, there's a lot of profit taking being had. There's a lot of fear creeping into the market with all this Middle East stuff going on. You know, that's going to be a big topic coming up here in a little bit as well. But I feel like everything's starting to snowball at one time, Mike. You know, it's pretty weird. You know, we see NVIDIA's chart. We're like, wow, that's some pretty massive selling pressure. People are obviously taking profits on the chip stocks. But, you know, now we have the Middle East kicking off again and the election coming up as well, which has been wild. Like, what kind of wild election is this where, you know, a candidate gets replaced like 3 months before we vote? It's a pretty wild time out there.
No doubt. And, you know, as we look at VIX and the market and everything going forward, it should not be surprising that the market is only going to get more crazy as we get closer to the election and just as the end of the year comes along. And even if we just look at VIX seasonality, right, we can see that historically speaking, we're in the time where, yeah, VIX tends to move higher, but we normally don't see like a peak on VIX until like October and November. So we're just starting out the uptrend. And as we can see by this red line compared to the historical averages with the gray lines, like, yeah, like, we're like increasing quite a bit, but again, like, we're just getting started in this historical uptrend, and we're surely outpacing like historical averages.
Yeah, we definitely are. That's pretty insane to see how high over the average we are right now. But then again, that was a pretty big pop that we just saw with VIX. I'm sure that we'll see, you know, more volatility on the VIX itself, like more up and down price action. So be ready for that over the next few weeks. But Mike, I know we've been looking at this chart for a while, even back whenever VIX was all the way down here right before this, and we warned people time and time again that, you know, this is that time of the year where VIX starts popping off, and there was a bunch going on in the market. And, you know, Mike, I gotta give ourselves a pat on the back for this one. If you guys benefited from this, definitely let us know in the comments. That'll be a fun read.
Yeah, and specifically you, Tom, you were talking about some of these volatility-related ETFs quite a bit as well. So for those of you who don't know, keep a close eye on like UVXY. That's a prime example. It follows volatility, and the higher it goes, the not only the more explosive it goes, but it acts as a area of the market that tends to, I guess you could say, provide where a lot of other areas of the market tend to dry up. We can see UVXY was up 35% just on Friday, and Tom has talked about that one quite a bit. So shout out to you, Tom. If you guys are new to the channel, consider subscribing to get our videos recommended to you more often. But anyways, not only are we seeing the VIX go crazy and the market and everything like that, we're also seeing a repricing of rate cuts. So basically, at this next FOMC meeting, which is scheduled for September 18th, we are now expected to see 150 basis point rate cut, which previously was only expected to have 125 basis point rate cut. So the market is surely expecting rates to come down a lot sooner now.
Yeah, they are. And Mike, I noticed that, you know, as we look at it, just going down the line into next year, it's pretty insane how, like, how accelerated they're expecting these rate cuts to be, right? I can't believe how much this chart has changed over the past like 6 to 8 months. I remember at the beginning of the year, Mike, remember no rate cuts this year. Then it turned into like three. Then it got higher and higher, right? Now we're looking at what? Two here before the end of the year, 2 or 3. So it's going to be a very interesting chart. I will say, guys, the data got a little bit skewed at the end of day Friday, so dismiss that there. But I'm definitely glad to see traders looking for that 50 basis point cut. I know a lot of people have been talking about that since Powell spoke last week, and I don't know. It'll be interesting. Hopefully they keep asking the Fed members about that.
Yeah, so as we look at rate cuts or volatility or the market overall right now, the most important thing is to understand that we are in a period of higher volatility. You can attribute that to whatever reason you desire, as there are multiple reasons causing this move. But regardless, what's most important above everything else is to be adaptable as always, but understand that we will see bigger moves in both direction nowadays. Like we could see like some of the recent price action has been some of the most bearish price action that we've seen in bare minimum months at a time, and that is just a byproduct of the new market environment that we are heading into. During times of higher volatility, you see huge moves to the downside, but you also see extremely strong, powerful moves to the upside. And if you're caught on the wrong side of that, it's going to hurt. So you got to make sure that your position sizing is dialed in and that your stop losses are set strategically now, and just be willing to adapt quickly. You know, the market's starting to move in some serious ways. Those who adapt will definitely prosper, while those who continue to operate and trade the market in the way that it used to be will definitely feel the heat a little bit. So keep that in mind. But we also definitely have to talk a little bit more about what is going on in the Middle East right now. Basically, last week, there were definitely some increasing tensions, to say the least. But now a handful of U.S. and Israeli officials are now expecting like a possible attack from Iran as soon as Monday. So this is definitely a concern for multiple big reasons. But again, just keep this on the back of your radar, because it's not good in any way, shape, or form.
Yeah, it's really not. And like, if they're expecting an attack as early as Monday, that means next week, all eyes will be on this situation. And, we've already been seeing a lot of crazy price action in the short term based off this. And Mike, one thing that I was a bit surprised of last week is, well, with all the Middle East conflict and everything like that going on, I was pretty surprised to see crude oil dropping off as much as it was, right? We go to the daily chart, you see crude starting to break down to recent support. I know we did see that volatile move up Wednesday, but then it came roaring right back, and I was like, wow, like what's going on here? I did notice that the dollar was down a ton on Friday of last week, so that might have obviously added a little downside pressure to oil. But in general, Mike, whenever we get conflicts like this and usually things start breaking out, we see volatility to like the upside with oil. So I'm a little bit I guess taken aback by what's going on with this price action.
Yeah, I mean, a lot of times oil has a lot to gain from situations like this one, and we even saw that BNO, big money trade, pull back quite a bit. But as this situation in the Middle East continues to escalate, keep a close eye on oil, but even other areas of the market that can benefit, like defense plays. Like I know like Lockheed Martin was seeing a lot of good inflows over these past couple weeks as tensions have continued to rise and as the stock reported earnings. But keep in mind, there will definitely be multiple ways to play it. I think the absolute most important thing when it comes to like specifically this Middle East news is to continuously be aware of what industries are benefiting the most. For example, like if oil starts to turn around and starts to see a lot of inflows, then that could be significant. But at the same time, if oil just kind of stays stuck and choppy, there will be no reason to try and like force a move that just isn't there. Like if defense stocks are what are ultimately seeing the good price action and movement and money, then you have to follow that, right? So let's just keep our eyes peeled and continuously reassess and look for potential opportunities with this. But either way, that is the situation there. Tom, we had the biggest earnings week of the entire earnings season last week. And while this week isn't as crazy, we still do have a lot of big players on the schedule.
Yeah, 100%. And on Monday, guess who reports? Burke B. You gotta love that. Warren Buffett. But nonetheless, in after hours, pretty popular stock. Palantir will be reporting Monday. Hims has been pretty big this year as well. Lucid on Monday and after hours, even CSX, which was a recent big money play. So those are all going to be on watch. But then we have SMCI, Rivian, Airbnb, Uber, and a win on Tuesday. Wednesday, we have Shopify and Disney in pre-market, even CVS. And then in after hours, Robinhood right there, Oxy in Wednesday and after hours as well. And then Thursday, we got Unity, Eli Lilly. So there's quite a bit on the radar. Even CGC, a popular marijuana stock, on Friday. But Mike, out of all these stocks, my favorite is going to be Nikola on Friday. They're going to have to push another fake truck down the hill. But no, I'm just kidding, guys. I'm really actually going to be watching Disney very closely this week.
Yeah, it's going to be an exciting week, and there are a lot of different stocks that'll be exciting to see how they report. I'll tell you, Tom, I'm definitely going to have a very close eye on SMCI on Tuesday after close. This is one, I guess you could say, semiconductor-related company that has exploded over the past year, and it is slowly falling from the heavens. Like, when you look at a long-term chart of this one, it peaked around like that $1,200 mark back in like March, and ever since that point, it has been slowly fading and fading and fading. And it's now to that point where it's like breaking lows, and it's like almost in some ways kind of leading the chip stocks down. This stock was so strong in the beginning of the year, and it's just giving back like a lot of its gains.
It really is. It started the year, though, all the way down around like 290 to 300. So I guess it's still up quite a bit. It's pretty crazy to say that like you can see a pullback like this and the stock is still up 123% on the year, right? That just goes to show the volatility SMCI has.
Exactly. And then on this week's economic schedule, it is pretty dead and just clear, which is a good thing. There is some ISM data coming out on Monday, 30 minutes after open, but besides that, we are free and clear for the week, so it'll be all price action and earnings related, which is all you can ask for. So that's great to see. So let's get right into some setups and predictions. A stock I'm watching very closely right now is Coinbase, and it is to the downside. So I've been talking about this one a little bit over the past couple weeks, and basically it is fading lower in a very strong way. Over the past 2 weeks or so, it rejected off this like $270 resistance, and it has been falling nonstop. It is now to the point of that like lower support area of its like recent channel, right around like $200. So if we see a clean and strong break through this one can definitely get nasty. And I would love to pick up this one at a good price for the long term, but I think it definitely has a decent amount left to pull back before that happens. So that $200 area is the most important area for this stock, and I definitely have a bearish bias on this one going forward, and it'll definitely be on my radar closely.
Yeah, and of course, Coinbase could move with like some Bitcoin news or anything like that. So keep your eyes on the news with Bitcoin. But it's definitely been pulling back a lot, Mike. 200 will definitely be on watch for me. With my next stock, I'm looking at one that I talked about a little bit last week, and it had a great week, especially compared to most stocks. So that is Kraft Heinz. I know this thing's a bit of a slower mover, but it's doing pretty well following the earnings on Friday. It was up 1.86% again. And whenever you go out to a daily, it's been coming up very well off this bottom support around 31 to 32. So I really like the short-term price action. Looks like there's been some good inflows with it. So I'm going to keep watching it up during this time of volatility with the market. And don't worry, guys, there's going to be lots of other plays on volatility coming up here in a minute.
Sounds good. Another stock I'm watching closely right now is Netflix, and it is also to the downside. This is one that we've been talking about quite a bit in a bearish way, and it has been moving nonstop to the downside, which is really great. We are getting pretty close to the $600 support, which will be important, but the recent price action has been overwhelmingly bearish, and what I like more than almost anything else about this one is how consistent it has been to the downside. Not even just in the short term over the past couple days, but when you zoom out even further, you can see like ever since like the start of July, this thing has been getting rejected every single time it tries to run up, which goes to show you that there is more selling pressure than average with the stock, right? Every single time it tries to run up, it gets rejected. It keeps making lower highs, and then it's also making new lower lows as well. So either way, Netflix will continue to be on my bearish radar going forward.
Yeah, mine too. And, that actually goes right into my next play, being a tech stock like it is. And my next play is SQQQ, which I talked about on Thursday night's video. And on Thursday and Friday, SQQQ started exploding as the NASDAQ broke down. So I'm going to keep watching for good price action to the upside here in the short term out of SQQQ. But it kind of comes down to the overall market. We need to see a good flush continuing to happen here with the market. QQQ needs to have a good move under like that 444 low from Friday. And we need to see another good flush. If we wake up in the morning and QQQ gaps up and we start to see an intraday recovery, don't try to buy SQQQ, okay? That's going to be a pretty rough play, especially because it's leveraged. So keep that in mind. But SQQQ will do very well in the short term if the NASDAQ ends up falling.
Sounds good. All right, well, it's now about that time for today's momentum plays. And with the first one, we have SMCI to the downside.
Yeah, SMCI has been one of the most bearish plays here in the short term. If they break back under $600, then keep watching them back down.
Sounds good. With the next one, we have AMD also to the downside.
Yeah, AMD showed a lot of weakness last week, even though they were one of the green chip stocks, which was kind of funny on earnings. So they ended up pulling back a lot. If they break back under 130, then watch them down. That's a nice hold level there.
All right, and with the last one, we have Tesla for both directions.
Yeah, and Mike, so many stocks are around crucial levels right now. Like Tesla is almost down to $200 even. So in the short term for tomorrow, I'm going to watch for a breakdown under 205 and then for a test of 200. But I wanted to pull up the book map really quickly and just show you how huge this $200 level is. On the book map, you can see that huge stack of buyers down around $200. There was around 335,000 shares stacked there on Friday. So keep that in mind. And then I also was looking at 205. Like I said. So there was even a big stack of buyers there as well. So if that breaks, watch for that test of 200. That could be a first good target, but of course have 200 on the radar for a possible break as well.
No doubt. And Tom, that's a huge psychological level too. So good stuff there. And then what levels are you seeing to the upside?
Yeah, so if we do end up seeing a good bounce off 200 and a recovery back up and we end up getting back through 215, then watch it back up. But that's going to be a pretty hard resistance to break.
Sounds good. So we have both levels for Tesla. We have the upside ones and the downside ones. Keep them on watch for tomorrow, but also keep the downside levels for AMD and SMCI in mind as well. These three stocks are on watch for potential day trades tomorrow, if and only if they break through the levels Tom listed. Again, we have the downside levels for all of them, and then we do have those upside levels for Tesla as well. The stronger and more consistent these stocks move, the better the setups become with them. If they don't break the levels listed, then don't force the trade. But besides that, Tom, we are all clear for today's big money $1.45 million trade, and we are looking at ticker symbol KKR. This is a big stock in the financial sector, and it is somewhat similar to the JP Morgan big money trade that we talked about on Thursday last week, which ended up increasing by like 200% the next day. So that was pretty insane. Of course, most big money plays will not increase by 200% the next day, but talking more about this KKR one, they bought the 105 strike put options that expire on September 20th of 2024. Looking at KKR, these put options are slightly out of the money. They have some time to them. KKR is selling off in a major way. We're seeing a lot of selling pressure out of the financial sector as a whole. And overall, looking at this setup, it's definitely been selling off quite a bit over the past couple days. Of course, there is some risk of a strong bounce in the short term. But honestly, with the way the market is setting up, I don't think it's a bad opportunity over these next couple weeks. If you want it to be like a little bit more, if you want to like reduce like the variance and volatility, there's nothing wrong with like averaging into a play like this one, or even waiting for a pop back up for a, I guess you could say, better entry price on the puts.
Yeah, it is a little bit overextended in the short term. I would not be surprised to see like a little retest of some resistance or something like that. But nonetheless, that's kind of what I'll be looking for too, Mike, is maybe a little pop back up. There is some supports coming up, so maybe that'll be a nice area to watch, if you didn't catch the entry on Friday. But overall, I like the play down with these financial stocks in the short term. I think they become very overextended, and there's a lot of there's going to be a lot of negative headlines, right? If you start to look up like, hey, are rate cuts good or bad for banks? You start to, do some research. You find that rate cuts can be fairly negative for banks in the short term. So hopefully that's not the case, Mike. But, I'm sure that we could see some downside pressure with these banks, especially considering how high they've been combined like with the slight negative news. So overall, I'm definitely watching them down. I love that JP Morgan play from last week. I loved how it had the lower highs and that resistance overhead was beautiful. But like you said, a 200% increase the next day doesn't always happen right away. So don't expect that on this one, guys.
But as we look at everything right now, it is a great time to be a trader. There's a lot of action and volatility and big moves happening right now, which are what present awesome opportunities, especially for short-term trading. When you have a market where nothing is going on and there's just no movement or volatility, there are very few opportunities for short-term traders to trade off of. But when you have, big moves like we're seeing, and you have the VIX moving in the way it is, and you have Warren Buffett selling half of his Apple position, and you have rate cuts being priced in different ways day by day. You have huge tensions in the Middle East and other areas of the world. That brings craziness and volatility and just opportunities for short-term trading. So I hope you guys are as excited as we are, because these next couple weeks and months are definitely going to get more and more crazy, which again will ultimately trickle down to more and more opportunity for trading. And, to ultimately capitalize off situations like this, you have to have good, smart trading habits. And once you have those down, that's when you could really start to eye up some good opportunities. If you guys are new to the channel, consider demolishing the subscribe button. That way you'll get our videos recommended to you more often. In every single video, we cover the most important news you need to know. We show charts you'd never otherwise see. And we just talk about, again, good, smart, long-term, sustainable trading habits. We showcase big money plays and just important setups to be aware of. So consider destroying the subscribe button to get our videos recommended to you more often. Before we close out, we want to give a giant shout out to today's member of the day, Mateo, in the StockedUp Discord. They had one of their best trades ever, it looks like, with SAVA, a nice 1,000%er there. So great work, and keep on rolling. If you guys are into short-term trading, definitely check out that first link in the description and the comments down below to get in on the StockedUp trading floor. You get full access to all of our custom bots. You get access to the big money trades on the same day the trade is taken. You get access to our live events. You can chat with Tom and myself all day long, and basically everything you could need in terms of short-term trading is made available to you in one nice, easy spot. So check out that first link in the description and the comments down below. Besides that, let's have an amazing week in the market.